In this video, I'm going to show you how to trade using the ICC. And the ICC is a very interesting strategy because one, it is very simple and it can give you an insanely high risk reward ratio and a high win rate. So if you're interested in this video, make sure you stay to the end. Also, I'm going to be using this gold trade example to break down how you can take entries like this. So make sure you watch to the end. Now, the ICC is a strategy that works well with very volatile pairs, okay? Because normally you have to stay away from volatile pairs, but the ICC loves volatile pairs. Now, the ICC stands for indication, and then I will give you the C and the C parts later on while I explain. So, indication. So I'm going to be explaining the indication and the CC parts later on. Now, the ICC works with uptrends and downtrends only. Okay, so uptrend and then downtrends, okay, only, which means that you cannot use the ICC to trade consolidating markets. Okay, and usually it is because consolidating markets are to grab liquidity. Okay, and if you don't understand why, watch this video that pops up here. Now let's look at the uptrend version of ICC. Okay, now so when market is moving in an uptrend, we all know that markets will be making higher highs and higher lows. Okay, higher highs and higher lows. When the market is moving in an uptrend, it's going to be making higher highs and higher lows. Now the reason why the ICC grants you or gives you a high risk reward ratio is because of this. So imagine we are on the higher time frame. Okay, so the ICC, most of the times you start your analysis on a higher time frame, so the 4 or the 1 hour time frame. Okay, so if price is moving in an uptrend on the higher time frames, normally the higher time frames do not lie like the 1 minute or the 5 minutes time frames or the lower time frames. Okay, that is why the ICC gives you a high win percentage, because the higher time frames are most of the times accurate, or 90% of the times they are very accurate. So you can see that when price makes a impulsive move like this, okay, and it pulls back, the ICC grants you an entry right from this point. And then not only are you able to catch this move here, right, because for some strategies, people tend to exit when price gives them the high and is pulling back, right? But for the ICC, because we know we are trending, we can obtain a whole trend. Okay, so price can give us a whole trend, and that is why the ICC is very interesting. Okay, or that is why the ICC grants you a high risk reward ratio. So for the ICC, we start your analysis on a higher time frame. Okay, so let me put this here. So the first thing you do for ICC is that you go to the higher time frame, such as the 1 hour or the 4 hour time frame. Okay, and this is where you're going to be doing your analysis. So I put it there for you so that you can take notes. So if price is moving in an uptrend, okay, it's going to make a low. So the first low here, then it is going to make a high, right? It's going to make a high. Okay, then it makes a higher low here, right? Then it makes a higher high. That is a normal uptrend that we know, right? So for the ICC, the indication part of ICC is where you will know where price is going to move, and I'm going to show you why. So let's say price is moving in an uptrend, and this is the 1 hour time frame. Okay, this is the 1 hour time frame. 1 hour time frame, right? So where does the indication come from, or where is the indication? So the indication comes from when price breaks swing highs or swing lows. Okay, so swing highs or swing lows. So let me put it here for you. Indication comes from when price breaks a swing high or a swing low. So that is where the indication comes from. When price breaks a swing high or a swing low, that is where the indication comes from. Now, when price is moving upward, okay, it means that buyers, there are more buyers that are buying this market. That is why price moves up. Price moves up if people are buying a certain currency. Okay, that is how price moves up. So what do you think will make price reverse down when price is going up all of a sudden. Okay, so price is just going up. What do you think will make price reverse? If you know, put it in the comments. Now, if you don't know, what makes price move down is when sellers come into the market. Okay, so when price is moving up, the only reason why price is going to move down is because sellers have come from that point, or people are selling their positions at that point. So let me put sellers here. So meaning that if price reverses from a point sharply, it means that there was sellers sitting at that point. If the price is moving up and it reverses sharply, it tells us that there are sellers sitting at that point, right? Meaning that when price gets to that position again, so let's say price is at this current position. So let me clear this for you. So price is moving up and then suddenly it reverses from here. Okay, it tells us that there are a lot of sellers sitting here, meaning that when price gets back here, okay, it's supposed to do one thing. It's supposed to reverse and come down. Why is it supposed to reverse? It's supposed to reverse because there are sellers sitting at that point, right? You can see. And that is why sometimes when you're looking at reaction levels, when price gets to a certain position, it just reverses off of there, because you can see that previously there were sellers sitting there. But in this case, price doesn't reverse, right? It breaks above this position like there's nothing over there. So this is an indication. Okay, this is an indication. This is price telling us that at this level there are no more sellers here, because price has been able to easily break this position. Instead of reversing or stalling here, price just broke there, meaning that price is indicating to us that what, there are no more sellers at this or above this level or at this current position. So this is where the indication part of ICC comes from. So indication, right? Indication. Okay, let me put a D there. Indication. So price is indicating to you that there are no more sellers sitting here, and that is why we have the first part, which is the indication, right? So let me put this here. Now the second part is what we call the correction, right? Correction. So now when price gives you this indication, right, it normally comes back to grab liquidity. Okay, it comes back down, and that is the higher low that you're going to be entering from. Then that is called the correction, right? So this is the indication here. Let me put this at this side for you so that you can, it doesn't look too messed up. So this is the indication, right? Then we have the correction. So let me put this here for you. This is the correction. Okay, so correction. This is the correction, right? Then what you are going to be entering from, okay, this is where we are going to be taking our entries from, right? Where we are going to be taking our entries from is what? The continuation. That is the last part of the ICC. So you can see that the ICC is very simple. You don't need any indicators for it. It's just as it is, right? So the last part where you're going to be taking your entries from is called what? Continuation, right? Continuation. And so this is the ICC: indication, correction, and what? And then where you're going to be taking the entries from, continuation, right? So let me just copy this. I don't want to type it again. Okay, let me just type it. So continuation. Right, nice. So this is the ICC. Now I'm going to be breaking it down much further. Okay, so normally we combine the movement of the higher time frame with the movement of the lower time frame, right, when you're looking at ICC. So let me clear this for you. So let's come back to the 1 hour time frame. Okay, let's look at this into detail. So now let's say price has given us the indication. Okay, so this represents the 1 hour time frame movement of price. Okay, so this is the indication. Price is telling us that above this point there are no more sellers sitting here. So this is the indication. So remember, this is the higher time frame. Okay, this is the 1 hour time frame. So whatever you are seeing here is the 1 hour time frame. Okay, now let's use the lower time frames for our entries. Okay, or ICC uses lower time frames for entries such as the 5 minutes or the 15 minutes time frame. Okay, so let me make this a copy so we enter using the lower time frames using the ICC. So 5 minutes or 15 minutes. 15 minutes time frames. Okay, so you can use lower time frames for entries, right? And the reason why we use lower time frames for entries is so that you can get that high risk reward ratio. That is why we use the lower time frames for our entries. Now, this is the 1 hour time frame. Okay, whenever price is indicating to you that it is going to go bullish from here, on the lower time frame, this impulsive move here or this move here is a trend. Okay, so you are going to be seeing higher highs and higher lows, 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 higher highs and higher lows on the lower time frame. So this is the 1 hour time frame version and this is the lower time frame version. So let's say this is the 5 or 15 minutes. So let me just use 5 minutes, right? So what looks like this on the 1 hour looks like this on the what? On the lower time frame, like the 5 minutes time frame. So what you're waiting for is for price to change bearish for the correction, right? So let me move this here for you. So this is the 5 minutes version. So now, how do you know if the correction has begun? So this is the indication. Okay, so let's assume that this is the line that we have. Okay, this is the indication here, the same line that we have here. Or let me just drag it. Just drag it here. So this is what you're going to be seeing on the 5 minutes, right? So how are you going to know that the indication has ended, right? Now, when price is moving in an uptrend, you can see that it is not breaking the swing lows that it is making. Okay, so this is a swing low. A swing low is when price moves sharply from a certain point, and that point is low. Okay, this is swing low. And swing high, this is swing high. Swing high is when price is moving up and it reverses sharply, right? And swing low is when price is moving down and it reverses sharply. So you can see that price, when it is moving up, it doesn't break its swing lows. Okay, so if I start from here, you can see that when price is moving up, it doesn't break the swing lows. It just makes a higher low and then just keeps moving from there, right? It doesn't break swing lows. It doesn't break swing lows. It just keeps moving up without breaking swing lows. It doesn't break swing lows, right? So this is where price is showing you that it is still making the indication when it is not breaking the swing lows that it is making. It is just moving up nicely, as you can see here, right? So how would you know that the indication has ended, right? So this is the indication. The indication ends when price finally breaks the swing low, as you can see. So when price breaks the swing low, it shows us that the indication is about to end, right? So put this in mind. When price breaks a swing low, it shows us that the indication is about to end. What confirms the end of the indication is price makes a lower high, a high that is lower than this, and then it starts pushing down, right? This confirms that the indication has ended. So price will just be making lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, right? And this is what we call the correction. So the correction looks like this on the higher time frame or the 1 hour time frame, but on the 15 minutes time frame or the 5 minutes time frame, it will look like this. Just it will be making lower highs and lower lows like this, right? So something like this, right? So price will break here. I'm just adjusting this for you. Yes, so it will be making lower highs and lower lows, and then price will be making lower highs, lower highs, lower highs, as you can see, lower highs, lower highs when price is moving in the correction, right? So this is the correction on the 1 hour time frame, but when you move to the 5 minutes time frame, the correction looks like this. Okay, so what you're waiting for is for price to what? Price to finally give you that break, right? It will break this lower high and make a higher low. Okay, so remember, if price is trending down, it's supposed to be making lower highs and lower lows. So once price gives you a new high, right, this is where the correction ends. Okay, then you wait for price to come and make a higher low. So you don't enter immediately when the correction ends. You wait for price to give you a higher low. This is where you take your entry from, and then this is how you get the high risk reward ratio trades, right? Then this is where the continuation begins. So normally I put my stop loss right around here, but for safety, you should put your stop loss here. Why? Because this is where if price breaks, it will change trends, right? Meaning that if price breaks here, it means that the correction didn't end and it was just a manipulation or something. So you should put your stop loss below this swing low, right? So when price breaks here, we know that price is still going to keep moving down. But normally I put my stop loss right about here because I'm expecting price to make a new higher low and then just change from here. So this becomes my stop loss level, right? But for safety, just put your stop loss at here because normally price just comes down and then takes you out. Okay, so this is the continuation that you're going to be entering from, right, using the ICC. So then price will be making higher highs and higher lows over again, right? So this is the ICC and this is how simple it is. So the first step is to go to the higher time frame and mark when price gives you an indication. Okay, then you go to the lower time frame like the 5 or the 15 minutes. You wait for price to start the correction by breaking swing lows, right? Then it will start giving lower highs and lower lows. Then for the continuation, you wait for price to break above a swing high, right? Then give you a higher low, and then that is where you enter from, right? So this is the example for uptrends. Okay, so now let's apply the same thing for downtrends. Okay, let's apply the same thing for downtrend. So let me clear this for you so that you can see. So indication, correction, continuation. Okay, so remember, indication always comes from when price breaks a swing high or a swing low. So now let's say we are moving in a downtrend. Okay, price is moving in a downtrend. So when price is moving down, it means that sellers are, or people are selling their positions. Okay, a lot of sellers or people selling their positions. That is what makes price move down. So when price reverses and moves up all of a sudden, it means that at this level where it's reversed, there are a lot of buyers sitting at this level. That's why price reversed sharply, right? Meaning that when price gets to that same position, what is it supposed to do? It's not supposed to break through, right? Because it has already shown us that there are a lot of buyers sitting here. It's supposed to just go back up and then sometimes come back down. And this is what we call the consolidating market, right? But that is not what you're looking at. So price is supposed to behave this way, right, when it gets to this position, because remember, when price was moving down, sellers were the ones pushing it. So when price got here and it's reversed suddenly, it means that what there are buyers sitting at that point, right? So buyers, I'll put it here, buyers are sitting here. That is why price reverses sharply, right? So buyers are pushing price up. Okay, they're pushing price up from here. Buyers are sitting here pushing price up. So when price gets here, the buyers are supposed to kick in again. But when they are unable to kick in and price breaks, like as if no one is at that level, it indicates to us, price indicates to us that there are no more buyers sitting here. So that is an indication that price wants to move down from here. So this is our indication, right? Indication, right? So price indicates to us that there are no more buyers sitting there. So this is your higher time frame movement, right? So 1 hour or the 4 hour. So just like the way I did for the previous example, this is how your indication is going to look like on the lower time frame. So this move is going to be a trend on the lower time frame. So price is just going to be making lower highs and lower lows, 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 right? Lower highs and lower lows on the 15 or 5 minutes time frame. So when price is moving down, it is going to be making lower highs and lower lows, okay, creating levels of support as it is moving down or as it is moving down, right? levels of support, right? And this is the indication. So what you're waiting for is for price to break this level of support. Okay, so price breaks this level of support, then that alone doesn't tell you that the indication has ended. What ends the indication is when price makes a higher low, and then price starts the correction, okay, by making higher highs and higher lows, higher highs and higher lows. This is the correction. So this is how it's going to look like on the higher time frame, right? But on the lower time frame, it is going to look like this, a trend. So when price is making the correction, it is also going to be making levels of support. So what you are marking is the levels of support that price is making, or the swing lows. Okay, so what you are waiting for is for price to break the swing low, okay, at any point in time. You are waiting for price to break a swing low, but that alone doesn't tell you that the trend has changed and the continuation is beginning. What confirms the end of the correction is when price breaks this swing low, makes a lower high, and then this is where you take your entry from when price starts moving down, and then price makes that move, and then it just keeps going down, right? So price just keeps going down. So this is the continuation. So this is a very short illustration and a quick illustration of the ICC because of how short this video has to be, right? So this is the ICC broken down in the most simplest way. Now let's go and look at a real and actual example on the gold trade that happened just a few days ago. So the ICC is a strategy that is best traded when price is in session. So let me turn this on so that you can see. So price, when it goes into session, that is when the ICC is best traded. So you can see that price moves a lot in session, and that is why it is best traded when price is in session. So when you want to identify a session, you can just come to the indicator and then search for sessions. Then use the one by JSFX Addict. This is it. So this is what you should be using. Now you can see that gold last week wasn't giving us any form of indication, and I'm going to use the reaction levels. If you quite remember what I said about reaction levels, you can see that when price was moving up and it got to this point here, price was moving up, it got to this point, it's reversed sharply from here. So let me put, if price reversed sharply from here, it tells us one thing. What do you think happened here? There are a lot of sellers sitting here. So let me put this here, sellers. So there are a lot of sellers sitting here. So when price got here, what happened? It's reversed sharply from here, like this. So this shows us that there are a lot of sellers sitting at this position, meaning that when price is ever coming to this side, or when price ever gets to this position again, what should happen? It should reverse from that point, because there are sellers sitting there. And what happened? Price failed to break above and then just reverse from that point, as you can see here. The same can also be said for this level. Okay, you can see that there were a lot of buyers sitting around this area. Okay, there are a lot of buyers sitting around this area here. Why? Because when price was moving down, it's reversed all of a sudden and then it started moving up. So this tells us that buyers are sitting here holding price up. Okay, that is buyers are sitting at this position pushing price up. So when price gets to this point, what is supposed to happen? It's supposed to move up again, not break. So when price got there, what happened? It moved up. So ICC wasn't tradable in this area or in this zone because price was just bouncing between this and this, not giving us any clear indication until this Thursday. You can see that the same level that the sellers kept kicking price down, price just broke that as if it never existed. This means that the sellers that are sitting here are no longer there. So price indicated to us that what it is going to move up from this point if it ever comes up to this level again. So this is the indication that we're looking at. So let me just put this here for you so that you can see this. Price indicated that there are no longer any sellers. So this is the indication that the sellers that are sitting here are no longer there. Now what happens if we have an indication? The moment we get an indication, we are supposed to move to the lower time frame. such as the 15 or 5 minutes, right? So that you can track our indication and know when the indication is over and a correction. Now you can see that the 15 minutes wasn't giving us too much. Okay, so at this point you can just go to the 5 minutes if you want. So when we come to the 5 minutes, okay, you can see that this is the point that the buyers, push price up from to cause this indication. So we are going to mark this. So this is that point. Okay. So remember, when price is making an indication on the lower time frame, what should it be doing? It should be making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So this is what you are looking for. If price is not doing this, then it is meaning something else. Okay. So when price give us this low, okay, give us this low, it give us a new high, give us a higher low. Then you can see that it didn't give us a higher high. Price should have given us a higher high and then just kept going. It should have given us a higher high and then kept going. But you can see that in this case, price failed to give us a new high or a higher high. Price came to this point, which is a lower high. When we compare this high to this high, this is a lower high. So this raises a lot of questions about whether the indication is still going on. So if I want to continue marking this, I'm going to be marking my levels of what? Support. So you can see that when price made this high, okay, so let me clear this for you to see. When price made this high, this was the higher low. Okay, so you are going to mark this as your level of support because this is the higher low that price gave you. Okay, this is the higher low that price gave you. Okay, so you can see that this is the higher low that price gave you. And price was supposed to make a higher high, but it failed to, it wasn't making a higher high. It kept rejecting when it was, coming to this point. So if you mark this as our level of support here, you can see that price wasn't giving us the new high. It gave us this lower high and then tried to break up, but it didn't give us a new high. You can see that price was supposed to break this and then it should have kept going up, but it failed to do so. It gave us a lower high and then at this point it kept rejecting from this level here. Okay, so if you consider this as a higher high, this is not a swing low that you should consider because price didn't move up sharply. You can see that when price made, how do we know that this is a higher low? Price moved sharply from this point. And also if you want help marking your swing highs and the swing low, you can just use this indicator called pivot point high low. You can see that pivot point didn't mark this point here. So you can see that pivot point helps you mark your swing highs and the swing lows, right? So you just come to the indicator section again, search for pivot point high low. It's going to help you mark your point. So if price has failed to make a new high from this point, this tells me one thing. It tells me that the indication is failing to continue. So I'm just waiting for price to break a level of support. Okay, now this is not much of a break, okay, of a level of support for me. But if you consider this as a break, okay, so let's say price has broken here and then this is the end of the indication. Okay, let's say price broke here. This is the end of the indication. Okay, so when price ends the indication, what is price supposed to be doing? Price is supposed to be making lower highs and lower lows. So that is why I brought this way of thinking, or that is why when I discovered this, it changed a lot of things. When price breaks a swing low, normally price likes breaking lows and then it will give you another thing, or it will manipulate you into taking the wrong entries, then you lose your trade. So when price breaks a swing low, okay, on the lower time frame, it doesn't automatically begin, it doesn't change trends. Okay, so let's say price was making lower highs and lower lows, right? And you want price to break this, then it will change trends. When price breaks it, it doesn't immediately change trends. What confirms the change in trend is when price makes a higher low. This is where price changes trends and then it starts pushing up. Okay, so this is what you're looking for. This is what confirms that what the indication or correction has ended. So you can see that when price broke here, we're supposed to make a lower high, then price keeps going down. But when price broke here, it didn't make a lower high, it didn't make a lower high. It came and then it started going above this. So it's made another high level of support here. So this is what you could have marked here. another high level of support. If you turn on the pivot point, you can see that pivot point mark this position here, so we are good. So this is a level of support. It means that this is where buyers have come to sit. Okay, buyers are now sitting here, so price has given us a higher low here. So after breaking here, instead of price to give us a lower high and continue going, it didn't. It gave us a high, then it gave us a higher low. This tells us that the correction has not yet begun. Okay, so now what you are looking for is for price to break a higher low and then give us a what? A lower high. Then that is what confirms that the correction has begun. Okay, so remember, this is the indication that price made, and if the indication was supposed to continue, it was supposed to, or price was supposed to make a new high, make a higher low, and then just keep going up. But price failed to make a new high, and then price kept rejecting from this level here. So this shows us that the indication is already over, but the correction will begin when price breaks a level of support, makes a lower high, and then keeps going. So you can see that price broke this level of support yet again. When price got here, it broke this level of support again. So this is the second time it's breaking this level of support. And normally, when you go to the 15 minutes, you can see that you wouldn't have seen all this struggle here. The 15 minutes would have been cleaner. You can see that when price made the high, it made a higher low, and then it made a lower high. And this tells us that price doesn't want to move up. So this tells us that the indication has ended because price is failing to make a new high. Then price made a lower high, right? Made a lower low. Sorry, price made a lower low, lower high. And then you can see that price made a higher low, and then price broke it. But let's go to the 5 minutes. You're going to be seeing this on the 5 minutes anyway. So let's go to that exact location here. So you can see that when price broke again, this time it gave us the lower high. So when price broke here, when price broke here, okay, it's broke here and then kept going down here, and then it gave us this lower high. Now this shows us that the correction has actually begun for real. Okay, because you will not consider this as a pullback because just one candlestick. Okay, it's not much of a strong one. This is the strong pullback. So you can see that when price made this pullback, it continued going down. Also, your pivot points high low, you can modify it by coming to this point and changing. Normally the default numbers here are 10 each, right? So you want to change it to 5, and then so that it can identify more swing highs and swing lows. Okay, so you can see that price made a lower high, a lower low, and then a lower high, and then a lower low. Now when price is making the correction, remember it is supposed to be making only lower highs and lower lows. It's supposed to be going down, making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. But you can see that when price made the lower high here and then it made the lower low, it came to make an equal high. This is not what it should be doing. It should be doing, or it should be making lower highs and lower lows. So it should have maybe ended here, then kept going down. So this raises a huge question. This equal high that price has made here is very, concerning, and that is what you should be taking into consideration. And you can see that when price made this, price made this equal high, it made a higher low. This is what you don't actually want to be seeing. Price is supposed to be making lower highs and lower lows when it is correcting. So you can see that price made this level of support here, and this is where people often tend to ignore, because it's not always that price is going to look the same and it's going to give you a clean chart. So you're supposed to be working with the information that you have. You're supposed to be working with the tiniest bit of information that you have, else you're going to be missing a lot of trades. So you can see that price, when it's correcting, it's supposed to be making lower highs and lower lows, but it's made a higher low. So this gives us a red flag that the correction might actually end very soon, or sooner than we expect. So you can see that this is another level of support because sellers kicked in and then they started pushing price up, down from here. Okay. Then you can see that price came to break this level of support that sellers were trying to push price down from. You can see that buyers were struggling to push it up, so sellers were still pushing it down. So that is why I'm going to mark this position, because you can see that buyers are struggling to push it up. Then price came to break this. Okay, this doesn't end the correction, or this is not what ends the correction. What ends the correction is when price makes a higher low. You can see that when price broke this level of support, it made a higher low. So you could have entered from here, okay? But remember, this is outside of session. For the ICC, we don't trade it outside of session. But for gold sometimes moves outside of session because the Asian session sometimes trades gold a lot, or the Asian markets trade gold, so sometimes gold moves even if it is outside of session. So you are just supposed to take risk. If you want to take risk, you can take risk and then trade where this volatile pairs such as BTC. Sometimes BTC also moves outside of session. So when you take your entry, okay, you are supposed to go to the higher time frame, 1 hour time frame, or any high time frame, the time frame that you made your analysis on or you marked your levels on. And what you are looking for is to target the high or where the sellers kicked in. Okay, you are expecting price to move back to that point. So when you go to the 5 minutes time frame, what you are doing is you are targeting where the sellers push price down from. You can see that a lot of sellers were sitting here, so they are assuming that if price is able to get here again, the sellers will come in and push price down again. So that's where you're supposed to be taking your profit. But let's say you didn't enter outside of session, you don't want to take risks, so you didn't enter outside of session. I can see that when price came into session, it was giving us higher lows. So if you didn't enter here, you could have entered here. Okay, so here, let me put this. You could have entered here because this is about an hour and 15 minutes before landing session. So you could have entered and placed your stop loss here because this is where if price breaks, it will change trend. This is the higher low. You can see that you would have still been safe. Okay. Then if you wanted to enter from here you could have entered from here and then you put your stop loss right around here. Okay, you will still be safe because this is where if price breaks, it changes trends. So this is how it looks like. So you would have been safe from this liquidity graph that goes on. And also, let's say you wanted to enter from here. Okay, let's say you want to enter during beginning of a New York session. So you can see that New York session kicked in here. So you could have taken your entries from here if you wanted to enter from here. Then where should your stop loss go? Your stop loss should go above that swing low again. Consider this swing low is where price change trends from. So this is what we are expecting. This is where if price breaks, it officially ends, or it officially continues the correction. So this is the swing low that your price should go to, and you can see that you would have been safe. So this is how you enter using the ICC. But you see, the reason why the ICC is very interesting is because when price gets to that level that you're supposed to take profit, normally you just take partials. Then you can choose to trail your stop loss if you want. You can just trail your stop loss if you want, right? So let me show you how that is done. So what happens is that when price hits that TP level, you don't take profit. You just, if you're a risk taker, you just try and then be moving your stop loss above swing levels. Okay, so swing levels. So you can see that when price got to your TP, this is the swing low that would have caused price to change trend. This is that swing low. You can see that price rejected twice from here. So you could have trailed your stop loss to this point. Then at this point you could have trailed to this point. Then you could have trailed to this point. Then you could have trailed to this point. When price gets here, it rejects from here 3 times. Could have trailed to this point, or some might have trailed to this point and then they would have gotten taken out, but that's fine. So you could have gotten out at this point here if you wanted, right at this level, and that would have been a lot for you. That alone is a lot. So this is what the ICC does. And normally I don't usually put my time frame here sometimes when I'm entering because of the volatility of this pair. So sometimes I just use this support level, the overall support level that price should, because sometimes you're supposed to give your trade breathing space. So you can see that most of the times price just keeps going and then you keep trailing your stop if you had used this, you could have just kept trailing your stop, and then price would have just kept going until you got taken out here or something. So that is the ICC, and this is how it is used. So make sure you watch this video over and over again if you didn't understand any part. And also, I'd like to thank the individuals who subscribed and also liked and commented on the previous videos. This means a lot to me. It actually keeps me, going, and helps me do these kinds of videos. So I want to thank all of you. Now, if you love this video, make sure you subscribe, comment, share, and then give this to someone who is struggling with the ICC. See you in the next one.